Hello everybody, Jrock here. Welcome to this training on MetaTrader 4 app and how to set it up. What you're looking at is the chart of XU, gold versus the US dollar, and I am looking at the 1 minute time frame. As you can see, this is a white chart, very difficult to decipher unless you totally understand what you're looking at. It is a bar chart setting, so every line you see is a bar, not a candle, and that tells you the time frame, what the price did during that 1 minute time frame. When you click on your flywheel here, you can see all your different time frames: 5 minute, the 15 minute, 30 minute, 1 hour, 4 hour, 1 day, 1 week, 1 month. And then you have your F, which will give you your indicators, and then your plus, which will take you to your crosshair, and then you have your triangle, circle, square that will take you to your trend lines and other indicators that you can use on your chart. So the first thing we're going to do is to make this chart come alive. So you click over here in the top left corner, and then you bring it down. We're going to go to the settings right here on the bottom, and I'm going to change the line to a candlestick, and I'm going to scroll all the way up, and I'm going to choose colors, go to custom, and I'm going to green on black. And then foreground, I'm going to change it to the fourth gray down. The grid, I'm going to go to the third one down. Volumes, I'm going to change to yellow. And the bar up is green, your bar down can be red. Actually, let's see. Yeah, your bull candle is going to be green, and your bear candle is going to be red also. My chart line, I'm going to make my chart line that color orange. Bid price line, I'm going to make it a blue. And your ask price line, you can make it whatever color you want. And that is how you set up your colors. So let's go ahead and click done and look at the chart. We're going to go down here, push that chart button, and there you go. Your chart looks better. I use black background. It is easier on the eyes. The white is too bright and it will make your eyes bug out. So here we're looking, as I said, at the 1 minute time frame, and now we have all the candles, shows you up and down. You got a little color to your chart, and down on the bottom you see you have your quotes. So when you do push on this quote screen right here, it'll bring up your symbols, a few of your different pairs that are already on the screen. You can click up here to edit the pencil, and you will see a plus sign. We're going to click on that, and here are your different folders. I'm going to touch metals. I'm going to add silver versus US dollar. Go to energies. I'm going to go ahead and add these, crude and the natural gas, and then here are your currencies. We'll go ahead and add most of these that we use. So add all of the Australian, and then Canada and Switzerland. I'm going to add these euros. I'm not going to add the Norwegian krone or the Swedish krona or the Turkish lira. Jump down here to Britain. I'm going to add these, skip over that. I don't add the Singapore dollar either. You could add those if you want to look at them. And drop down here. I don't do the Mexican peso. And that is good. That's how you add the pairs. So when you go back to your screen, you will see all the different symbols. Now, for you to move some up, you go back to the edit, and you can scroll down here and then touch on this side. If you see one that you like, hold down on it and pull it all the way up to the top, to where whenever you click on the list, it'll be closer to the top where you're using it. Keep them organized. You can also delete them by going to that bin right there. Now if you look right here, you see the list of symbols and the price. Not a lot of information right here, so if you click here, go back to settings, and you click advanced mode, check that box. It's going to give you a lot more information on your quote screen. So let's go back to quotes down here. Now you see the low and the high, and the time, as well as the spread for each of the pairs. we don't really want to trade anything that has a spread, which is the difference between the bid and the ask. We don't want to trade anything more than 10. That means that we would have to overcome 10-point spread to get into profit. So I like the 2 or the 4 or the 6, definitely not a 30 or more, but the 30 is a spread on gold, so you will have to overcome that. It says 30, but it's really about 3 points, and you would just have to overcome it, which is not hard on gold. It jumps pretty quick. So that is your quote screen and what that looks like. And you have your chart, and then you have your orders. It shows you your current positions, which I don't, and then your history. This would be news, and then the chat room for the community, MetaTrader community, which I don't hardly use these last two at all. I just stick with the history, where you can see I made some trades, just doing a live demo for some people, made some trades. And at the top you can see the right corner there, you can change your time frame to show what you did for the day, week, month, 3 months, or do a custom time period. If you wanted to scroll back a certain time, dates, you can do that for each day. Alright, and then your orders, which I currently don't have any. So let's go back to the chart. Now, when you're looking at this chart, you see it's a 1 minute time frame. There's still not a whole lot of information here that would help me tell what I'm going to see in the next 5, 10, 15 minutes of price action. So we're going to add some indicators, and the way to do that is to click on the F up here. And once you click on that, it brings up your trend indicators, oscillators, your volumes, and Bill Williams indicators. So I am going to choose a relative strength index. I like that. Leave the settings, click done, and it shows up down on the bottom down here. Now the relative strength, it shows your overbought territory is above 70 and your oversold territory is below the 30. So generally when it comes down and touches the 30 or gets below, then we're going to have a reversal and it will bounce up. Not always. You have to use it in conjunction with other indicators. Similarly, when it gets above the 70 line, it's an overbought territory and it will pull back a little bit. Could go really far into overbought territory, so don't just think when it hits that line it's done. Now let's go ahead and add some moving averages. I'm going to say the main chart. Here's my moving average, and I'm going to, normally it starts out with a 10. I'm going to choose 10 and it should be simple. It said exponential right here, but I changed it back, and I'm going to make my color is going to be orange. So click done, and there's my 10 moving average, and that gives you a good indication what is going to take place. Now the 10 moving average is saying that it is giving you the closing price average of the last 10 candles, depending on the time frame you're in. That will say this, like right now, is the 10 1-minute moving average. So it takes the closing price of the last 10 1-minute candles. If I go forward to 5-minute time frame, every bar or candle is 5 minutes of time and price action. So this 10 moving average gives the closing price average of the last 10 5-minute candles. 15, the last 10 15-minute candles, and it will put a dot, and then it just connects the lines to give you the line that you see, the orange line. So if I were to jump into the 30-minute time frame, which is a time frame I like to look at for more stable movement, and you're not all over the place like with the 1 minute or the 5 minute, the 10 will give you a better time frame to hang in there and wait, so that you're not all over the place, in and out like a crazy person. So you see how the pair XU followed the 10 right here, jumped on top, and it bounced right here. When it took off, it probably broke above a resistance level. If I were to scroll back in time, you'll see that point was probably a resistance level. So finally, when it broke off right there, right here, it took off and went boom. And then it came back down, rested on the 10 right there, took off, traded sideways into it, and took off again. And then this is the time when it started slowing down, when it got under it here. But you see how powerful the moving averages are in giving you a story or a prediction of what is going to happen next. The 10 moving average is a very powerful indicator. Now, I'm going to add another indicator, and it will be the 50 moving average. So let's go here. And I'm going to change that to purple. And I normally take my moving average colors from light to dark because that helps me know what I'm looking at. Lightest colors will be the smaller moving averages, and it'll get to the purple, which is the 50. Now you see also it held the 50 when it had a very decent pullback right in the middle of your screen. It held the 50 and no candle closed below it. The wicks may have gone below it, but when it took off and it held in this area, held the 50, and it went straight up holding that. Well, when it came back over here, it tested your 50, and then it bounced up and it kept holding the 50 moving average until this point when it got over here, and we had one candle that closed below it. Let's widen that and see. Actually, no candle closed below the 50. So this was a strong indication that we were probably going to have a breakout above resistance. Even though the expectation was down, the indicators were pushing to lead us to believe that it was probably going to hold and go straight up, which it did. So anybody in down positions, like we had stop losses above the resistance at this level right here, 1291, and we also had a buy stop in, so that when it actually broke the resistance level, it stopped us out of our sell positions and put us in buy orders, and then it took off and we profited from the buy side. So let's go ahead and add another indicator. This time I'm going to add the 200 moving average, and I put that as red. Red is a danger color, so that is my danger zone. So if I zoom out and look at this, the red, your 200 moving average is the red line there. That is your last line of defense for support, major support or resistance on a chart. You can use it in conjunction with any time frame, and when it breaks through, then you know it's going to generally go in one direction or another, though it may break down and test it on the downside like it did here, but then jump back up. And this was just a bear trap because it came down and was catching people in sells, and then it shot back up. So you've got to be careful. Ride the wave. And if you look, if we zoom in right here, when it came down and it tested the resistance of the 50 right here, then it dropped. Well, when it got back on top of the 10 and it got back on top of the 50, we were off to the races. So this would have been the time for anybody in sell positions from here thinking it was going to keep going. If it got back here and you saw all of this action, I would be out of this trade and I'd be in a buy and I'd take it straight up. So we did end up getting in down here on gold, 1274 area, and we rode it all the way up. Now, sometimes you may look at a chart and you say, well, what is going on over here? How did it hold up in this area? What's it touching? There's nothing there. Well, that's why you add another indicator. So I'm going to add a 5 moving average, and that is one of the smaller ones. You can also have a 2 moving average, but generally we have just a 5. For quick scalping, people will do a 2 and a 5 crossovers, but that's for another video. So I'm going to make this color light blue, my lightest color. Close that out, and there you go. So you see how moving average help paint a picture for you to see the strength of a pair moving up or down. When the pair is on top of the moving averages, it's going to go up. And when it's riding the 5, that is a very strong move. And then when it comes into the 10, The 10 is a secondary line level of support, and then it will hold the 10 and keep going. And sometimes it will come back to the 50 like it did here. If it holds the 50, you've got a very strong likelihood that it will continue to move to the upside and break out in a very significant way. One more indicator that I use, and that is the Bollinger Bands. Some of you may be afraid of the Bollinger Bands, but it is a very powerful indicator. So let's go ahead and move forward in time. If I hold down on the screen, it will take me all the way back to the end of the chart and create a line. I can just touch it and that line will be removed. You hold down on the screen, it brings that line back up, and then that allows you to move the chart freely in this area. So I'm just going to touch it, remove it. Now, Bollinger Bands, I have a training on Bollinger Bands that is in the webinar section, UOP Training Center, that you can learn a little bit about it. But the Bollinger Bands will generally be a guide of resistance and support levels. The Bollinger Band comes with a built-in 20 moving average, which is that green line right in the middle of the screen. So there's your upper Bollinger, your lower Bollinger, and your midline, which is the 20 moving average. So when we zoom out a little bit, you see a lot of chopping going on in there as it's consolidating from the big run we had here, and it consolidated in this whole area before it finally took off. Little dip was to test on support of the 50, and we were thinking it was going to break down. If it did, it would fall hard, but it did not. It formed a high basing triangle and broke out to the upside. That was a bullish flag pattern that was forming. Right here, there's your flagpole. Your resistance was right here, straight across, and a triangle pennant. So that is a bullish indicator, and it broke out hard, ran way up here to 1300, and then came way back down. So we profited all the way up to 1300, and then some people got in and rode the wave back down. But the Bollinger Bands can provide an upper and lower level of resistance for upper and support on the lower. When the Bollinger Bands contract, like in this area, that's telling me that a move is about to take place. And if I were to go to the chat thread, I did say that in this area. I said Bollinger Bands are contracting, a big move is coming. And I was telling everybody to get ready. Said it will break out one way or the other. If it goes down, we're set. If it goes up, we're set. We'll be stopped out of our sell orders, but we'll make money on the buy side from having buy stops in place. And I'll show you the order screen here shortly. But you see the Bollinger Bands provide support and resistance. When it breaks through the Bollinger Bands like here, it will generally come back in. Now, a key to look at is, as I described in the Bollinger Bands, if it breaks through on a run, breaks through the upper Bollinger Band, and comes back and fails to break through the Bollinger Band again, that would form a double top, and it would say that's a good time to sell because it's going to come down. But if it breaks through and then comes and breaks through again, that's a sign that it's probably going to keep going up. So let's look at the next time frame. That I always go to the monthly time frame first. I zoom out and I get an idea of what it's done over the last few years. Here we see 10 years. Gold has gone all the way up to 19 something. And then it came down. You see how it popped through that Bollinger Band right there, ran hard through it. Then the subsequent test did not break through the Bollinger Band. So in this area would have been a great time to sell gold, because you see it came all the way down to this point. Now, why would I buy gold here? Well, let's zoom into this chart and we will see. What I see is a typical chart pattern called the head and shoulders pattern that is forming. It's an inverted head and shoulders, where this is the left shoulder, bounces, comes down, forms a lower low, that is the head, bounces up and forms a higher low, and this is my neckline. So when this breaks that neckline right here, if I were to draw a line across, which I will do right now, I'm going to do a trend line. So I click here. Here's all your different lines, channels, Gann lines, your Fibonacci's, your Elliott's, and your shapes. I'm going to go to a trend line. I'm going to take it from this point and go straight across. And there you see, when this breaks here, it is going to probably come down just a little bit and then power through it. And we're going to go way up here. That is my prediction for gold. So the short term, I guarantee you gold is going to, it may pull back just a tad, but it's going to shoot up to that line first, come back a little bit, and then boom, it's going to take off and run. So we're going to make a lot of money on a gold trade here in the next few weeks and a few months as we ride that wave. We'll put in some orders to trade this as a swing trade. But head and shoulders, it definitely is. Let's zoom in a little more, and you see how it hit the bottom, came up, and it formed a higher low on the monthly, has caught up in these moving averages. Here's your 50 that is starting to curve, your 10 that's caught there, your 20, and your Bollinger Bands are squeezing together. So the Bollinger Bands are going to squeeze together into this point right here, and then we're going to have a breakout to the upside. Guarantee it. I guarantee it. No doubt. Gold will run hard. So y'all be ready. Now, right now I see that it has rested on these moving averages right here, and it is picking up. So let's zoom in a little bit. It tested the support right there on this month, August, of that 20 Bollinger Band, the 20 mid-range of the Bollinger, which is also the 20 moving average, and it is pushed up. So we have two green bars. Though it pull back, they will generally start a new month, pull back, and then take off. Then pull back, start a new candle, pull back, take off, pull back. So you're going to have multiple green bars in a row going straight up. You may have one red slightly, but I don't think so. I think it's going to be a strong push up, just like the euro did. If I were to click here and go to the euro on the monthly, look what happened when the euro formed a triple bottom and it broke its neckline right here. If I were to draw that line right across, when it broke that neckline, look at that candle that formed in July. Powered straight up, triple bottom, boom, boom, boom. Raced straight up, and it hit resistance. So the euro is going to pull back a little bit as this 5 MA catches up, and then the next candle will be straight up to this resistance level. So we're going to have another big run of euro soon, I believe. That means the US dollar is going to go down. So all pairs with the U at the back means that the chart is going to go up. So the US dollar, if you got UJ for US Japan, well, that's going to go down. Over here, if I go to UJ, and this is a monthly, this is going to go down right here because the U is at the front, leading pair, so that means we're weakening. US dollar is probably going to come down to here, and that means gold will shoot up because gold is the right there. Gold is the leading symbol of this pair, XU. So gold is going to shoot up. So that's why we expect all of that to take place. Now let's go ahead and look at the weekly. And we see on the weekly it has formed a triple top right here, but it is still pushing up. Now we did have a low, a higher low, a higher low. Now we had a lower low. Now it did not break through the Bollinger Band here, 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 or here. So there's no major move that has taken place yet, but it is coming to bear. I believe this may pull back. It's caught that 5 MA right there, that light blue line, and so it is probably going to pull back. This is for the week, so the next candle is about to form for this week starting tomorrow, and it's going to start right here. It may gap down a little bit, but may pull back a little bit and catch people saying, oh, gold's going to go way down, and then boom, it's going to shoot up. Watch. Just watch. I'm pretty sure. I do not think that it's going to come very far down. If it does, we'll be prepared, but I think that it's going to catch a lot of sellers. They're going to think that it's going to fall hard, and it's going to shoot up. We could come back to the 10, that orange line, or the 20 as they come over here. It may pull back to that point and then shoot up. So we may have another bar down next week, but I don't think it will last very long on the downswing. So it will catch people by surprise. Because here the closing, we had a high, a lower high, and a higher high. So it is definitely making a loaded coil pattern, loaded spring coil pattern. So let's go ahead and look at the daily. And look at that daily chart. It's formed a inverted hammer. So that would tell me that it's going to fall. But if I zoom out and look, there is your pattern. And it is forming, if I were to draw some trend lines in here, I'm going to give me a trend line right here. Draw a trend line across that point right there. And one more. Draw a trend line across this point right here. Actually, I'm going to do it this way. Alright. So that is what it's going to look like right there. And then you have another line that I'm going to do, another trend line. And I'm going to say that can be right there. So there's your flag pattern. Now we could come to this point a little bit, but here's your 200 right there curving on up, and the 50 is right in here, so we may come down just a little bit. I don't really think so. We're going to power through that resistance and we're off to the races. It's going to happen. We're going way up here to, let's see, what is that, 1370. So from 1286 to 1370, we're going to go way up. That's about almost 1,000 pips that is going to be collected. So I like the look of the daily chart for a breakout eventually. We may have a little pullback, like I said, but it's eventually going to go up. Hour 4, you can look at that as well. So here's what I was saying. When it shot up here and it didn't penetrate the Bollinger Bands at this peak, but then it came back and it didn't penetrate at this peak, well, it penetrated here, broke through the upper Bollinger Band. That is what tells me that it is going to push up again. It's definitely going to come up. If it fails to break through again, then we have a double top and it will come down. But I believe it'll come down. It won't come down as far as this level, but it will shoot back up. That is my analysis on gold. So you see how the indicators work and paint you a story. If I were to zoom out a little bit and take a look at the chart on the daily. Okay, I'm going to take away my indicators here and actually go to the indicator screen, delete all of those so my indicators are out of the way. And then I'm going to click on it and do a Fibonacci retracement and see what it looked like. So click up there and drag it all the way down here. Pull it way out. Let's see, right in that area. Move it up just a little bit. All right. So this had from this point down here, and if people were expecting it to go down, they say, well, it would pull to the 23, 38, 50 or the 61. Well, it didn't stop there, so it kept going. Boom. So it had a 100% retracement. And it did the same thing here and here. Almost a 100% retracement. And this one retraced a little bit further down here from that point, even further. If I would have done the Fibonacci from here to here, it went past this. So people would have expected a pull up and then back down, but it kept going all the way. So that's what indicates that it's probably going to keep going up. And we know gold is real strong, stronger than the dollar. So it's going to keep going up. We're going to make quite a bit on the movement on gold. So if I were to take this and move it the other way and put that up there and put that down here, that level, right there. All right, and then we're going to zoom in and look as it ran up to that point. We're seeing that it's catching on the moving averages Actually, a little bit of retracements when it ran all the way up. What retracement level from the peak are we expecting to see? So I'm going to hold down here, get my line. I can move it over, remove the line, and I'm going to zoom in. So where will it retrace to likely? It will probably come back to this 23.6 level because it's too strong. Too strong. If I were to take this and move my Fibonacci, if I can get it to cooperate, move it to this point where it hit that peak right here, and you say, well, when it ran up and hit that peak, how far back is it going to come? Came a little bit past the 23.6, but it hit right on that 50. We're on the daily chart, and then shot back up. So the Fibonacci didn't provide a support level. The 50 did. So you've got to be careful where the big boys are playing. You don't want to hold and put all your buy orders in, or wait to take profit on sells on the pullback at exact Fibonacci retracements. You got to look for moving averages too. And if you see, we'll zoom in. This was a beautiful cross right here where the 20 is going up and the 50, it stopped right there. That was a powerful support. Boom, it took off. So you've got to be wise about your trading and know that it's not always going to come back to where it is usually anticipated, especially if moving averages are involved or the Bollinger Band midline. So you will take your profit before and then maybe set in some buy limits before and scale in. So like if you get a swipe trade, sometimes they'll see it's coming here, but they know it's going to pull back. Well, they say, well, it could pull back to this point, so let's go ahead and put in a buy order here at 1262.33 at that point right there. And then it could come back a little further, so if it does come back to that point, well, put in another buy order for 1254. But it could come all the way down here to that level, 23 to the 38.2 line. That would be, let's call it 1247. So they got 3 scale ins, 3 equal lot sizes for you to get in, but they ultimately believe it's going to go up. So they want to get you in for sure. And then they say, well, if it pulls back a little more, we're going to get in twice. We'll average down. If it does a stronger pullback, which we don't anticipate, but if it does, we'll get in a third time, and we've averaged our entries down so that when it does take off, we'll be very nicely in the money. Boom. You'd be well in the money when it took off way up here. And they'll generally have a take profit at one level. They may use Fibonacci extensions or moving averages or Bollinger Bands for when it breaks out for a take profit, or a price level. If they see a price level by scrolling back in time, they say, it may stop here at that level where the peaks are, which is 1294, or like I called on Friday, I said 1300 is a century mark. So I guarantee you it's going to go there to that 1300 mark, and you see what 1299.99, it went right through it, and everybody had their take profit. So the selling was over. I mean, the buying was over, and the selling took over as it fell back all the way to where it started from and further. But the century mark 1300, that's a good point of resistance. Also support if you're on the upside and it's coming down. So I made that call, said get out at 12.99. We're not going to hold all the way to 1300 because we want to beat them to the door in case they stop it. There's too many big orders that take profit at 12.99.50. Then we may not be able to get out at 1300. But this did shoot up and then came back down. So we got out, took our profit, and we ran, setting up for next week. Now, here is the order screen that you can click on from any time frame right here. And at the top, if I click on that, there's your different types of orders: market execution, buy limit, sell limit, buy stop, sell stop. Now, I do have an explanation on buy limit video. I will explain it real quick. You do a buy limit if you think that it is going to pull back and you don't want to pay a higher price. So if you see somebody's charging you, say, $5 for something, you say, I'm not paying $5, I'll pay you $4. That means you're going to wait for it to come down a little bit, and then you'll pick it up at that price. So you're setting your buy limit at a lower price than what they are trying to sell it to you at, or where the current price is. So you're wanting it at wholesale, not at retail price. And you don't want to set it too low because it may come down, not fill your buy limit, and take off. So you want to be wise. You don't want to be too greedy and squeeze it for everything it's worth. Same thing on a sell limit. That means it's coming down, but you think it's going to pull back. You're not going to pay the chase price, which when it's falling hard, you're not going to get in. You're going to wait for it to pull back. You're patient, which is really good. And you get in with a sell limit order, and that means it'll fill you at a more reasonable price, a wholesale price, and then boom, it'll fall. You make money on the sell side as it goes down. You close your position, which means you buy out your sell limit, and you bought low and you sold high. You just did it in reverse order. Now, you can also do a buy stop, which means that if you've got a pair, you're expecting it to go down, but in case it breaks up, you put in a buy stop, meaning if it breaks through that resistance level and starts heading north, it will buy into a position for you as it's running. So it's a buy stop, means stop here and fill my order please for a buy. I want it to go up. That's how you can think about it. It's like a bus stop for a buy. So it stops running. As it breaks through, it picks your buy order up and keeps going. Boom. Same thing with a sell stop. If it's falling and it's at support and you think it's going to go up, but it could break down and fall hard. Well, if it breaks through support, then you're saying stop here and sell, give me a sell order into the market execution, so that as it falls, I'm making money while it's dropping. And then you would set your sell stop at whatever you wanted to as it's falling. So the price of the sell stop has to be lower than the market price. So I'm just going to touch there and say 0.0. So we're at 1286.40, but my sell stop means if it falls below that, fill me sell order. And then you could put your take, your stop loss right here would be, generally 30 pips and 1289.00. So as it goes up, then you would be okay. It would stop you out at 1289 if it bounced up on you on a sell order. And then you put your take profit. We're going to say as it falls, we're going to go 1270. So you got between 1286 down to 1270. And then you would take your profit. You just choose good till cancel. We always leave it like that, or you can specify a time frame. And then you click place, orders placed. The market is closed, so it's not going to fill. But that is how you place an order, and that is how you read a chart and set up your MetaTrader 4 app. I hope this has been a blessing to you and that you will be able to use it going forward. Continue to study and learn. Be patient. Do not over leverage. Do not risk more than you have. And do not be emotional in trading. The problem is that we generally take losses because we trade emotionally and we hold longer than we're supposed to. We don't use stop losses. And then when a pair is running, we get emotional and say, oh, we're in profit, we're making money, I'm going to get out. Just get out. And you don't wait till it gets to the point where it would maximize your profit. You trade emotionally, so you limit your profits and you maximize your losses because of emotion. That's how you lose every single time. But if you trade strategically based on indicators, entry and exit signals, and by bouncing ideas off of other seasoned traders, and you minimize your losses by using stop losses, and you let your profits run, you will make money. Lots of it. This is a multi-millionaire, a multi-billionaire, and a trillionaire, future trillionaire skill set that you are learning. So what we have here is a pip calculation. Pip means points in percentage. Now, what I have here is just a general, easy to understand set of numbers, and the actual value is going to be different for each pair because of the exchange rate. To get the exact calculation, you'd want to go ahead and use a Forex calculator. So on the left side of the screen, you see lots, 0.01, 0.10, 1.0, 5.0, etc. And then beside it to the right is the actual dollar amount. So a 0.01 lot is 10 cents roughly in real value. And if a pair were to move 100 pips, that would be a $10 profit or loss. And pairs can move 100 pips in 30 seconds or less. And you will see in a second how quickly it is to make a lot of money or get your head knocked off. Now, going down on the left side, you see a 5.0 lot is $50. A 20.0 lot is $200. And a 50.0 lot is $500. A 1,000 lot, which is the largest I've seen, is $10,000. Now, I'll explain how those fit in. So the next part is EU, that is the Euro US dollar. If you have a value current price of 1.17632, you have 5 points after the decimal place, and I abbreviated it for you. So in the A spot, that's your whole dollar. Your B is your tens, so that is 10 cents. Your C is your ones, that is 7 cents. Your D is your tenth, that's currently the 6/10 of a penny. The E is your hundredth, right now it's 3/100 of a penny. The F is the thousandth, which is 2/1000 of a penny. The pip is the second number from the right. The micro pip is the last number. So the pip in this scenario is the 3. And that is in the 100th of a penny spot. For every 100th of a penny, move on the EU. If you have a 0.01 lot, you will gain or lose roughly 10 cents, as you see in the calculation above. So with a 1.0 lot, you will gain or lose $10. With a 10.0 lot, you would gain or lose $100. Now this is why risk management and controlling your greed and emotions are most important. Using a 1.0 lot, which is $10, on a $500 account will get your head knocked off and blow your account in seconds. A pair can move 50 to 100 pips in 30 seconds. And with no stop loss, a 50 pip move against you at 1.0 lot or $10 a pip, that's $500 gone in 30 seconds. Sure, you can make it on the upside if you're right, but if you keep risking or playing chance like that, you're going to lose more times than you win. Now let's look at XU. It's a little bit different, and that value is 1294.53. The pip is the 5. In this setup, the micro pip is the 3. We don't really look at the last number when you're doing calculations. So let's say you have an entry of 1294.53, and we set a TP or take profit at 1299.65. Well, you would take 1299.6, leave off the 5, minus 1294.5. That gives you 51. I basically did 96 minus 45. That's 51. And multiply that by 0.01 lot or 10 cents, and you get $5.1. That is your profit on a 51 pip move in gold. Now, terms and abbreviations. Just have a list here for you just to get you moving in the right direction. EU stands for Euro versus US dollar. UJ would be US dollar versus Japan. NC, New Zealand versus Canada. NCH would be New Zealand versus the Swiss franc. TP is take profit. SL, stop loss. TF, time frame. SO is a stop out. BB on the chart, Bollinger Bands. MA, moving average. RSI, relative strength index. Now there's obviously quite a bit more on the abbreviations and terms, but you will be able to learn more. Just ask questions in the master chat thread, and any of our fabulous leaders or assistants or many other people that know what they're doing already, they will answer your questions, because obviously the leaders get 100 messages an hour. We try to get to all of them, but sometimes it's not feasible, especially for the signal callers, to trade their own account, to mark up charts and put in orders, send them to you, plus do other things in real life. It's quite difficult to keep up. God bless you. This is Jrock with Team UOP, Unit of Prosperity. inside of iMarkets Live. And you have a wonderful week going forward. We'll get ready to buy gold. God bless.